Well, the US Federal Reserve has raised interest rates to their highest level in 16 years. But the good news is the indication is it's approaching the top of its rate hiking cycle. Joining me now is our business reporter, Ed Boyd. And the US Chairman, Jerome Powell, began his press conference this morning by declaring America's banking system is sound and resilient. This, of course, follows the collapse of two American banks. How important was that statement?
That statement was really important, Laura, to just reassure not only investors but people that have deposits in a lot of America's banks that they're okay and everything's going to be fine. So he really got on the front foot this morning, talking up the strength of America's banking sector, which is something that we're expecting him to talk about today, because remember, the US Federal Reserve last week stepped in along with the US Treasury when Silicon Valley Bank went under and said they would guarantee everyone that had a deposit at that bank. So that was the beginning of his statement today, but he really went on to talk about how inflation in America is still too high. That's why he lifted interest rates by 25 basis points earlier this morning to the new range of 4.75 to 5%. So rates in the United States are now at their highest level since 2007, which was just before the global financial crisis. And some people are saying feels like we're almost in a similar position now with the banking crisis in the United States. But just listen to Jerome Powell's comments here, where he talks about how he believes we're getting close, at least, to the end of the interest rate hiking cycle in America.
We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate.
And it was an interesting market reaction, Laura, because as he raised interest rates, stock markets in America went up. They all thought, great, it looks like rates are coming to the end. And then during his press conference, he sort of said, look, we may actually need to keep lifting rates a little bit more. And that actually caused all the US markets to fall almost 2% overnight. So we're looking at a negative opening on our local market this morning off the back of that. So he was a dove at the start of the conference, and then he felt a bit hawkish by the end.
Yeah, right. So investors went a bit psycho over the course of that. So the Fed close to pausing rates. That's what we're honing in on. So can we assume that Reserve Bank here will pause next month too?
A lot of money markets are expecting a pause from our Reserve Bank. So that is the expectation, that the RBA will pause next month. However, there's a lot of economists that think we may get one more rate rise slightly later in the year. So the RBA, the theory is they pause next month, they see the impact on the economy of the 10 consecutive rate increases that they've hit the economy with, give it a month to check it out, and then potentially in the month of May raise rates one more time. Now, that's also May is when the US Federal Reserve actually meets again. So their next board meeting is on the 2nd of May, which will be around the similar time to the RBA. And that could be the end of the rate cycle in Australia, and it could also be the end of the rate cycle in the United States as well. And then it could be rate cuts by the end of this year, which is good news for people that are looking to pay less money on their mortgages each month.
Yeah, right. We keep on hearing about inflation. Just if you can answer this question, Ed, Jerome Powell saying, we're getting to the end of the rate cycle, the hikes, we're going to pause and see, but also warning that inflation is still a massive problem. So is that like a bit of a concession that rate hikes isn't the only way to get down inflation? What is it?
Yeah, I actually read an article this morning with the money market predictions for America's cash rate, and the expectation there is the cash rate in the United States might not get cut until 2024, purely because inflation in America is hanging around a lot longer than it has been in Australia. Inflation in America has been higher for longer, and it's still at a very high level. One of the big differences with the US banks is most people have a fixed rate mortgage in America, whereas here a lot of people are on standard variable rates. So when the RBA here lifts rates, it affects a lot of mortgage holders, whereas in America they don't get as affected as much. So it takes a lot longer to bring inflation down in the United States. So I think that's why Jerome Powell was really highlighting the fact that inflation is still a big problem for his economy.